All right, all right, all right. Sound check should be good. Good morning. I'm curious. Did y'all hear music or no? I'm curious. Did y'all hear music or no? I'm curious. Did y'all hear music or no? I don't know if that's going through my the stream as well or just my headset. Good morning, everybody. YouTube delay, figured, yeah. It's the one shitty thing about the YouTube. I'm actually not sure how far it is. Tell me, Jack, what time? I guess, right? As far as this here, this timer, what time is it relative to you? Like, I wonder how far, I guess, behind it would be. Four, 5 seconds. Okay, okay. All right. Okay, not as bad as I thought then. I was thinking it was like 30, 45 seconds. So it could be better, but a few seconds should not affect any of the price delivery. We'll go there with it. Cool. All right. Well, we'll kind of run through, right? I'm not going to be interested until 10 o'clock. I've been following this little setup here. Didn't want to execute on it, just wanted to follow it, see if we were right. So far, it's playing out nicely. But let's go to a higher time frame real quick. Kind of figure out where we are and get a sense of what we want to look for. So if I go to the daily first, we've been working on that daily. We've just been looking for continued buy-side delivery, right? Any run lower should be seen as a pickup of stops, right? Any run lower, returning into inefficiencies, same thing here. Running lower into inefficiencies, continuing to print. So I have a few daily levels here. We've hit the daily fair value gap high last Friday. I'm looking now for this actual daily high here, and then the daily swing point, so external range. That's the next two areas here that we're looking for. Pretty large daily volume imbalance. If I was to show this here, here and here. I'm looking now for this actual daily high daily volume imbalance, and then the daily swing point, so external range. Now we'll notice as it's dropped to a 4 hour, there's a 4 hour fair value gap that's kind of aligned with that area. Pretty large daily volume imbalance. Right, I've actually already labeled this daily volume imbalance. I'm gonna go ahead and move that, maybe. Now we'll notice as I start there it is. 4 hour. Cool. There's a 4 hour fair value gap. So as we saw last week, right? Returning into that 4 hour fair value gap, holding consequent encroachment. Notice the bodies can't even get near that level. So not only are we holding consequent encroachment, we're really refusing to get near it because we're holding this daily or this 4 hour inversion. So we understand, right? This 4 hour inversion is holding us. Wick goes into the daily volume imbalance. And now we've accelerated out of that daily volume imbalance and out of that 4 hour fair value gap. This here was a daily swing point as well, okay? So kind of meshing all these points together, right? Daily swing point here. Wick goes into the daily volume imbalance. So now we have ran through an old daily high. We have left behind a new fair value gap on that 4 hour. And that really has my attention as of now. So this morning, right, I'll be looking at this 4 hour fair value gap. Daily swing point here. We're obviously hitting some ugly consolidation here through an old daily high, right, which is why we're waiting for 10 to give us a little bit better kind of look at what we can expect for the morning. Oh, there's a small echo. What the heck? How about now? Sorry, I didn't even hear that. Got to read the chat. Echo, echo. Has the echo been destroyed? Cool. Nice. All right. Yeah, my bad about that. Should be good though. Yeah, we'll get back to it. All right, so we're consolidating right around this 4-hour fair value gap right now. So now in this lower time frame structure, what I'm interested to see is, actually let's work on a 15 quick. Still about 9 minutes till news, so no rush here. All right, first we want to label our new day opening gap from Thursday into Friday. We're going to use that still because it is large. Right, this one here in itself is about 6 handles. So with something like that, I want to have that on my chart just to be kind of aware. This is the old daily high. We're going to leave that there for now. Ideally, I'd like us to actually hold this 4-hour fair value gap here. Okay, if we want to see like a run into this is a new week opening gap. So notice that we've actually been hitting this new week opening gap, finding pretty strong resistance here now. I would still favor us to get up and through that, right? Find that as support to now continue into just these daily areas. So this swing point, daily fair value gap high, and eventually, if we can, right, these daily fair value gap areas. If we were to close below this swing point here, that would cause me some concern, and we may need to revisit now this new day opening gap. And remember, the old daily high is actually paired with that level. That's why I haven't moved. So old daily high, new day opening gap, old highs will tend to act as support, right, in current bullish order flow. So now we have that area paired with that new day opening gap. If we end up reaching into here, that's another area that I would expect to kind of catch price. But to be honest, I would really favor running from where we are here. So now ugly price action. We can see, however, we have picked up the sell side already. So we had equal lows that were formed here in London. We move away from those lows. We engineer some equal highs up here. Right, so notice that we're kind of engineering liquidity on both sides of the market. We have untapped buy side resting here, sell side resting here. We've cleared that sell side. So technically, right, we've cleared the sell side while opposing liquidity to this sell side is this high. So that's why I want to see if, right, a lot of consolidation going on in here. We don't want to get lost. I'm really focused on this fair value gap here. And as far as bearishness, this fair value gap here. So our two PD arrays that we're really getting squeezed within. I'm going to go ahead and move this 4-hour. We understand we're within that, so we don't really need to be seeing that on our chart. Yeah, we'll leave it like this until 10. If anything, okay, I would favor us run through. Notice we have equal highs here now. Okay? So I'd favor we run through buy side, just continue delivering to buy side. That's what I want to see. I would allow one quick run into this. So if we want to create like a 10 a.m. Judas, right? We've already created a 9:30 move, but if 10 o'clock wants to run out liquidity, I would look for this low and this low here. As I look right now, however, this swing low is an intermediate swing point. Short-term low to the left, short-term low to the right, both being held by this fair value gap. We're above the 8:30. We're trying to get above the midnight. All right, this dotted area is midnight, dash line is 8:30. Both key points, right, in that power of 3. So if we were to get above this first and price starts moving higher prior to, right, 10 o'clock, I actually wouldn't want to see this low be taken. But at this point, it's about waiting, just waiting. Bias is bullish, yes sir, because of the 4-hour fair value gap if we get above it. Yeah, I mean, for real, bias is bullish. I mean, it's been bullish since really, I mean, here. Really all the way down here. Right, we've had the macro bullish. We've just wanted to see higher prices. So any swing high, let me hide this. Any swing high, we want to see targeted, starting really all the way back here. Right, we target that. Swing highs get targeted, consolidate, but push up and through. Same thing, right? Swing highs targeted, swing highs retrace, targeted. Swing highs here, retraced, get targeted. So now I just want to see that continue. Right, we've put in a new swing high. As I mentioned, I'd like to see if that 4-hour can hold us to accelerate us into that swing high. If not, then we have to play off this old 4-hour fair value gap here. A lot on this daily, which is why we kind of keep it on the 1 minute. But yeah, overall, want to see those higher prices. really until we get into, right, with my adjustment, settlement and be adjust, until we get into all-time highs in ES. I'd like to see that continued bullish delivery. So notice here as we're talking about, okay, midnight level starting to offer support. I have this volume imbalance here because this is an important one. This candle never was able to get into this candle's closure. You see this candle uses it perfectly, same here, right? So now the candles are using that area. You even see here, right? Multiple times we couldn't get above it. So now that I see this candle close above, early indication to me, buy side becomes the next target with the equal highs here. Remember, this is our 1 minute fair value gap. So we'll keep a few PD arrays up coming from this 1 minute as well. Honestly, if we kind of hold this buy side, that'd be ideal to then let kind of liquidity accumulate. 10 o'clock, run through that. How do you mark up targets whenever we are making all-time highs? He said not the inverse head and shoulder. Hey, joke's on us, right? We're just actually retail traders this whole time. Michael tricked us into retail. How do you mark up targets? So that's, yeah, that is a little tricky actually. Once we clear these all-time highs, okay, that's going to be new territory for everybody, really. What I would do is I would look to start taking really kind of measured moves of manipulation legs. So like if we continue to run, I'd take this leg here really, and I'd want to see, right? I'd run a fib on that, and I'd run some projections on it to give me projections, but I don't even think that daily. Okay, yeah. So right, if we got above this daily high here, we have another standard deviation point here and here that we can aim for. I can continue to kind of add into that. Aside from that, I also have, right, if I was to show you on a 15 chart with this indicator that we use, right, purely based off ICT concepts, let me see if it pops up. It'll often give us the daily range and the right projections of one standard deviation in either way. And what I mean by that is here. So this is just using historical data, right? How much price has moved based off the opening. And if I show you the opening price here, right, one standard deviation of that would be here, and then lower, obviously here, right, half standard deviation as well. So once we start getting above like all-time highs, this is what I would use to target. Right, so if I think we're bullish and we see bullish setups, I'd be using the standard deviations of the daily open as my objectives. You see the half standard deviation is pretty aligned nicely with that high, which is why I'd like to see buy side delivery. Don't know if we'll get all the way up there today, however. 13 NQ done for the day. Yes, sir. See, that's what we like. Nice Monday morning, in and out quick, done. All right, right. So now 10 o'clock news coming here. As we said, we didn't run this buy side. We would like to see that hold. Because we are above the midnight open and the 830 level, and because this intermediate swing point has been put in, at this point with the 10 o'clock news, I would not want to see this low be ran. Okay, I would favor that we actually hold this volume imbalance. If anything, hold the midnight or the 830, run through this buy side. If we run through this buy side, then maybe we continue to consolidate and kind of aim for this. But off rip, I would favor actually a move higher first. Not wanting to see this low be hit. Kind of seeing this used as protection if we want to dig lower. So we'll see, right? Buy side here, then remember buy side here as well. Into that new week opening gap. And then ultimately you saw this equal highs, external range buy side. 5 seconds till the fireworks. Let us see. Right into that fair value gap, that's fine. Only worried if we start closing below, right? Wanted to see this be left. Notice we make perfect equal lows there. So now my attention goes here. Perfect equal lows. We actually left this low intact. The close of this will be pretty important. I want to see if we close above this fair value gap here that we have marked out or not. How do you find the indicator? It's an indicator made by one of the members here. His name is Ether Matt. I believe he's on Twitter as well. But it's a paid indicator that he had created. What about pivot points? Surfskate, to be honest, I'm not someone that really uses that at all. I wouldn't even tell you how to use those. Cool. All right. So just wrong. We wanted to see higher prices. We don't get it. We're not in anything, so we don't take any damage. Now we go back to reassessing simply. So as we said, if we were to close below, let's go to this 5 minute here. This is that 4 hour fair value gap. I'm going to bring this back now just because I want to see what price does around it. Clear that buy side. Right, because we've now displaced under that 4 hour fair value gap and we've closed underneath it, closing underneath the sell side as well. Closing underneath this sell side here also. So now I'm thinking that if we're going to do this, leaving these equal highs here, this may want to offer us resistance now. This 4 hour, even though the 4 hour hasn't closed, right, the 1 minute can use that as a key area to find resistance paired here with these down close candles to actually send this lower into, as we mentioned, right, new day opening gap here. That became our objective if the low was going to get ran through. It does. So now I'd watch and see, right, do we kind of gravitate towards this new week opening gap here? Attention obviously goes right towards this fair value gap. All right, so still, right, this is where we're looking at. Bearish fair value gap. High, low, lower high broken. Mitigation block instead of a breaker. Here. So now fair value gap overlapped with mitigation block. With sell side objectives lower. So we could reach, I think we could reach into that. Yeah, if we're doing this, I'd like to see us actually gravitate towards that new day opening gap there. Tap that and then see if we want to give us some type of long setup or something. I went short from this fair value gap. We'll get out. Right there at that new day opening gap. So Monday morning, just going for low hanging fruit. Right, stop above consequent encroachment of the bearish fair value gap, as well as above the 830 level. Above mean threshold of this mitigation block. And, oh, okay, so we're actually tapped out right there. So we've been tapped out. Nice and quick this morning. That's what we like to see. All right, 2 minutes and we're already done. So I'll kind of share that with you quickly. So nothing in here, as we said, just waiting. We have no rush trying to do anything when we have 10 o'clock news. Not interested in that whatsoever. We're consolidating here. This bearish fair value gap had our attention, right? That's what was marked out. If we cannot get above that, price is showing an unwillingness. Well, that obviously means we have lower objectives, especially because, right, what is this? Short-term high cleared, break in structure, YouTube model, coming off of an inefficiency. So I wanted to see price get up and through that. Okay, we wanted to see higher prices, but I'm not forcing my bias. So as soon as we get that 10 o'clock news, holding consequent encroachment, huge displacement, I'm wrong, right? I'm not holding on to my idea. I understand, okay, the idea of going higher is not correct. Instead, we've broken structure here, leaving now a new premium to use, and that's all I do. Right, so we leave that fair value gap. As we trade up into that, I go short. As we mentioned, stop right above consequent encroachment. This fair value gap, if we're bearish, should not flirt with that consequent encroachment level. It doesn't. And then we get out at that new day opening gap. So we catch the swing high, not getting the swing low, unfortunately. But that's all right. Good start to the morning. Good start to the week. one up already. So now after coming off this new day opening gap, what we start doing is monitoring order flow. So we want to see, okay, this fair value gap now, do we continue to respect premiums and really just run lower, right? So we have this new day opening gap. Remember, lower, we also have the daily volume imbalance. So I'll leave that here. Took a short on NQ, same spot. Yes, sir. Good shit, brother. Nice and easy. Well, I'm not someone that uses NQ, but we could look what an NQ do. Pretty similar. It actually didn't give you right, and this is why I favor ES. Notice, and ES returned into that fair value gap where we entered. Or if I was using NQ, I would have tried to enter inside of this fair value gap and not gotten tagged. So just personal preference there. In my opinion, okay, if we clear this fair value gap, watch that as a possible inversion play. This would be a rather large stop, but if you're someone that doesn't mind larger stops, coming back for the high. That's only if we close above, though, okay? Don't want to be premature because we could still easily hold this. So what 15 seconds playing with. So let's see if we can play on a 15-second here, right? So we're inside of that fair value gap. Ah, okay, never mind. I was like, if we were to close below this low, we can use this 15-second fair value gap here. We didn't close below the low, but I still want to see if that fair value gap actually holds. Because, right, short-term high cleared, wicking through that. Yeah, that held. Okay. But even these second time frames, no question. Still early though. We'll see if we want to push through that. Volume imbalance, more likely bearish than anything. Do you consider the short at 934 on ES? 934. No, sir. Days with high impact news, I have no intention of trading before, especially if it's a Monday, okay? So it could be the cleanest YouTube setup, right? It could have every single confluence I could ever see. Personally, for me, I don't enter prior to really high impact news. So like this itself was clean, right? Like we're saying, that's the YouTube model. So if you were to go short first there, I can't really complain or say anything because it worked. But for me, I like confirmation. That's more of my trading style. So once we confirm that we want to hold this move here with this displacement, then I piggyback, right, the remainder of that move into our objective. I've noticed that you place your stop loss at the high of the fair value gaps. Wouldn't it still be okay if it reached the high of a fair value gap as long as it stays? Yeah, it will. It would. And right, that's why it depends more on order flow. So like when I'm entering a trade using a fair value gap, 95% of the time, it's with the expectation that I don't want to see the actual fair value gap get filled in, or I wouldn't be using it. Right, which is why most of the time my stop will be above the fair value gap that I'm using to enter. If I feel as if a fair value gap will get retraced into fully, okay, my entry changes to using consequent encroachment of that fair value gap with my stop above the swing point. So two different entry methods. Right, I got short using this volume imbalance here real quick just to mention. So the volume imbalance entry that I teach here, stop right above the previous candle. It gets left open so we could stay in that. Targeting 5 handles. Which will just bring us here. At this point, my stop, pretty tight stop because we're already, right, so I don't like this type of trading where we're already at the extreme of a range. I like entering in the middle of a move with objectives below. Whereas this one, right, because we're at the really extreme of the range, my stop already has been moved tight, right above this fair value gap. So break even. Like this, right, one handle stop. Because if anything, this volume imbalance should hold. And that's all I want to see. So if we get above that, I'm not interested. NQ short from 17,733. 17,733. 17.7. See, I don't even know the numbers. Oh, way up here? Hold up. Oh my gosh, brother. You're telling me you turtle souped it? That'd be elite right there. Turtle soup the highs right here. I mean, if you did, that's a good one. Off the rejection block. That's clean. Great trade. ISM came higher. I'm going to need you to explain what that is because I have no idea, brother. ISM. Internal service. No. Oh, okay. That makes sense, yeah. Bum, bum. Let's see, NQ, ES. NQ a little bit higher than ES, but so far pretty much moving in tandem this morning. I'm not someone that uses the dollar too often, Kay. As if you've been around with us recently, you've kind of seen that the dollar, even though the dollar's moving, indices tend to kind of not respect it, right? So like last week, dollar moving higher, but we took longs into buy side while ES was moving higher. And it still happened, right? We still got our targets delivered. So I haven't put too much weight into that ES. Let's see if this can get our objective here though. All right, so still like this. As we said, we're not worried if our stop gets hit. If we're bearish, this 15-second holds us. So I'm fine with the stop there. Where'd my thing go? What the? It doesn't show up on the... Huh. That's weird. Regardless, either way. For us to get 5, we need to get 49.54. At this point, stop break even. At this point, we out. Okay. All right. Well, we're out there. Nice. So yeah, just continuing, right? And once again, good example. As we said here, I'm not someone that likes to just enter blindly off of the setup. I like to have confirmation the setup will hold us. All right. So once we hold that, break lower, we look for that. Here, this fair value gap holds. All right, I don't want to use it right away. It holds, leaves, leaving a new premium. That's where we short, right? We've confirmed that we're going to hold that. We're confident at that point going short, and now we get out. So not bad. I might end the stream. I'm 2 for 2, so we might close it early anyway. All right, honey. Have a good day. Love you too. All right. Let's see what we're using. I love your trades, mate. Thank you, brother. 55. What the hell does that mean, Jack? 55. You just give me random numbers. Oh, you're saying target 55? Nice price action. Yeah, nice price action so far. Another volume imbalance. All right, so now at this point, I'm just really kind of trusting that we want to run lower. Notice new day opening gap here. We take consequent encroachment of new day opening gap. Bang, bang. Closing under that early indication, we want to visit the low of it. So we've closed underneath. So like here even, right, potential another short. We'll tape read that one though, because now we're getting a little far. So right, if we close underneath this consequent encroachment, I'd want to see if that holds us, especially because it's paired with that fair value gap. So now we just look for that continued bearish delivery. Equal lows as well, so that kind of bids well for us, right? Engineering these equal lows right near, remember, a daily volume imbalance. So engineering liquidity near a key level. We like to see that. 15-second, once again, volume imbalance entry. All right, we're going to go ahead and, oh my gosh. So I took that short here on the micros again. I closed it early. Was trying to partial. That's frustrating. Sorry. we'll contend with that. So on this account we shared earlier with the original short. God, that's actually real frustrating. It's all right. We're not butthurt. Okay, shorts, boom. We're confirmed at this point. So as I said, I entered short here on a different account with the volume imbalance entry. This one I'm entering because we've already confirmed we're bearish, right? I was waiting for it here. Boom, we enter, we hold that, we run. We hold this fair value gap, we run, where we enter and hold the premium and run. So at this point, right, price is bearish. It's established bearishness. I'm not wondering if it's bearish or bullish. I understand what it is. When we close below, now the new day opening gap, consequent encroachment with that fair value gap there, that's not random. Right, nothing here is random. That's too clean. Going through a discount in the form of that new day opening gap, consequent encroachment, leaving behind a premium in an already predisposed bearish market that's holding premiums. So this one, easy short. I mean, easy short here. High probability, okay? Equal lows, as we mentioned, sitting there. Daily volume imbalance lower. I had wanted to partial at that daily volume imbalance low and kind of leave someone to run. I unfortunately closed it all, but can't complain, right? We're on sides. We're reading the market perfectly here this morning. We're catching the swing high entries once again. Pretty simple. Let's take a break here. If we are seeing price based on structure is still bearish. Yep. I like reversal around here due to the 15-minute. My thing is we may not even, right? So like I'm looking at this 15-minute as well with this daily volume imbalance. But if we get below that, we've already displaced pretty aggressively underneath the daily volume imbalance. We're inside that 4-hour fair value gap, remember? So yeah, we really need to be kind of careful here and see what we want to get. We have closed underneath, however. This is the 15. Okay, so 1 minute structure can use that and just continue to melt. I'd look for this fair value gap in here. This fair value gap becomes a breakaway gap. Okay, so if we're bearish, we don't want to see this fair value gap get traded into. And there we go. We're about to dump. Oh yeah. So much value. Thank you. Hey, no problem, brother. Glad I can provide that for you. Isn't it a problem trading on news? No. It's only a problem if you're trying to enter before the news, which is what we don't do. You want news to trade. Right? News is what gives you the volatility. Like this. Love your style. Thanks, CMOB. I think I have. I've seen you on my Twitter for sure, actually. I appreciate the support, my dog. Don't feel any type of way. I don't usually use Twitter too much. I just kind of post and go on Twitter. So I don't necessarily interact too often, which is L. I could be better at that. So unfortunately here, I wanted to go short off this candle. Okay. I was going to just use an immediate rebalance, but I don't want to chase at this point. But we're going. This might be a sell model, to be honest here. Consolidation, reaccumulation, smart money reversal. We're just debating here what we want to see now. Okay, so I'm going to go, what is this? This is the inversion 4-hour. Okay, yep. So bear with me quick. Might get a little messy real quick. We'll clean it up though. 4-hour there. 15-minute, don't really care about that at this point. Okay. All right, so next objective here, 4-hour bearish fair value gap, or inversion, excuse me. And then new day opening gap. Did Shadow just do the McDonald's? Probably, low key. You telling me that song don't hit? It's ingrained in our brain. Did it? I'm loving it. You could use it for anything. How would you pass a 100K account with 3 to 5K drawdown and 6K target? So for me, what I did for that, right? Whenever I have 3% drawdown, 0.5% risk for me. because that would allow me to lose 6 trades in a row before blowing the account. And I mean, not to sound crazy, but right, hardly ever will I lose 6 trades in a row. So that gives me a pretty good buffer. Let's go to the seconds time frame, see if we can't catch something here. So watch this. Was it right there? The inversion play. Right there. Like that. Get above it. Short that. We'll read that. No entry. Pure tape read. See if the 15-second can't deliver us something. If not, no worries. Is the daily volume imbalance you're talking about? It is extended trading. Oh, okay. And I always have my B adjust and settlement on. Okay, so that's something that, right, if you've been with me for a long time, you know that, but newer people, that's something that I'll always leave on. Real quick, I just want to see. Geez, ugly in here, crazy. Volume imbalance, wick. I do think we want this low. Just kind of looking at this here. So potentially, what's this 15? Okay, I want to wait for the actual 15 to close below this 15, and then at that point, if we get, bring this back up. So we have that 15-minute here. I actually don't think we revisit this, but we'll leave it just in case. I'm looking for a volume imbalance. I really like to target those. Nothing in here. Oh wait, there's one there. Okay, hold up. We might have an opportunity. So on a 15-second chart, right, this is that volume imbalance that we like to see. Let's go like that. Now back to a 5. So this is a 15-minute volume imbalance here. Basically just want to see what reaction we get around that. We do have a 1-minute fair value gap here. But if we want to run lower, now attack this low, I think that 15-minute holds us. This volume imbalance right here. So what we can do, let's go to like a second time frame again and see if we can't catch something potentially. Only if it goes short. If it continues to press up, like if we press up higher, I'll kind of just let it rock. Especially if we close below. So I want to see if we close above that fair value gap or not. Closing is important. Okay, close underneath it. So I'd allow that. Got above the volume imbalance, so we may want to use it as support. We're going to give it the 1 candle's opportunity to actually get back underneath that volume imbalance after holding this fair value gap. Because now this fair value gap here has been completely repriced into. We close underneath, so it's been rebalanced. So if we are bearish and we don't want to get above this, this candle should close underneath this volume imbalance, hold that as resistance to gravitate towards this sell side. If we revisit this high, more than likely we come back into the 15 here, which at that point, that's still a possible opportunity to get short because the 15-minute may close underneath that level. There was 5 minutes, however, until, okay, so 5 minutes, right, where's it at? Wait, nope, I lied, 15, yeah, 5 minutes until this 15-minute candle closes. So one thing that we can maybe expect is, let's say that we want to actually invert this 15-minute fair value gap. That means that this candle closes underneath. We could see these next 5 minutes, right, a form of time distortion where we actually just kind of consolidate here. So we kind of play around right in this low and high, not clearing this low or really returning any higher, back and forth for the next 5 minutes, engineer liquidity, and then maybe right run that to get back into the 15-minute, followed by the break in structure, which at that point, if we get something like this, right, that's when we look for shorts into the 4-hour fair value gap. It's so interesting to me how we both look at price a different way. Yeah, that's the beauty of it all. Right, once you get proficient with the concepts, that's what they are. They're just concepts. They are tools. to help you create your own trading model. Right, and I will admit I'm a little overkill in the fact that I've pretty much spent years learning every PD array. Okay, so at this time I'm pretty fluent with all the PD arrays. My trading style is more using which PD array is there at the moment rather than looking for like a certain model, right? Like the YouTube model or a breaker. But you don't even need to be like that. That's just kind of my personality. You can find one thing that works and just print that, right? Over and over and over. Refine that one thing. And that's a money printer. 1026. So we're getting there a little bit quicker than I would actually like to see, because now, right, if this candle closes back inside that, in theory, this is not an inversion yet. We need to close below it. So we've just got back into that area. Negating this and this. So I don't really want to see those anymore. I still like the sell side here. If we can still hold the 15, right, we need to wait these next 4 minutes basically. That's all I'm waiting for. I want to see how the 15-minute closes before really assessing our next move. Sticking to one model helps me mentally. Yeah, that's fine. And I think, right, that's what I would always advise newer traders, even if you're not new but still kind of struggling to be consistently, right, profitable. Stick to one model and absolutely perfect that, right? Refine it to the fact that you could find it in your sleep. Because that's what I did. Right, I didn't, or at least at first I tried to go in with the learn everything at once idea, and that is just detrimental. Right, you're never going to be able to actually absorb the knowledge that way. So what I had to do was I had to get proficient in one thing, right? OTEs. Learn everything about them. Get very proficient and confident in my ability to spot and execute on them. Right, once that happened, then you can move to order blocks. Right, once I got proficient in that, then I can move to understanding how the breaker works. So it's a lot of time, but like you're saying, mentally draining for sure. How long have I been learning? I would say at this point it's been 6 years. I found ICT in 2018. Went full blown into him mid 2019. So yeah, it'll be about 5 years, or no, 19, let's see, 2019. Half of 2019, all of 2020, 2021, 2022, 2023, 2024. Okay, so 4 full years, almost 5 full years, I guess it'd be. If my math is right. Actually, I wasn't. So what I did, right, in 2019, I was a part of his private mentorship, but it was only maybe 4 months. At the time, I couldn't actually pay to be a part of it each month when I was in college. So I joined it, kind of lapsed on the payment, got booted. Understandable. So for me, I'm actually not a charter member. All of my stuff came mostly from YouTube. And I will admit, right, I did have access to his core content and stuff before it was placed on YouTube. So I have seen all his core content and things like that, which has helped tremendously. But for the most part, no, it's mostly YouTube stuff. I would have loved to be a charter member, because then I could add that to my title. Charter member. That gets a little more clicks if you say you're a charter member. My favorite PD arrays. My favorite PD arrays to enter on. Fair value gap or volume imbalance. One of those two. I'd say 98% of my entries come with either a fair value gap or a volume imbalance. I target. That's a little different, I guess, because my targets vary pretty greatly, to be honest. It depends on what current structure is. Okay, so I'm not necessarily locked in all the time. For those that know me well, I'm pretty much a ends model trader primarily, right? So 5 handles quickly, add those 5 handles over and over. That's how we build the equity. So a lot of the times when I enter, it's pretty easy for me to exit because I'm just targeting 5 handles. So a lot of times, right, I just got to find my entry, and then 5 handles from there will be my exit. In certain days like this, right, if we have targets aligning with it, I'll use that. So like from this short here, longer than 5 handles because this new day opening gap was here, which we would draw into. So it really depends on what PD array is there, right? It could be sell side liquidity, it could be a daily volume imbalance, it could be an old untapped inefficiency. It really depends. All right, 15-minute has closed now, okay? Notice underneath the actual 15. So now we have a 15-minute inversion. I would actually want to see if we were to turn into this fair value gap right here, What kind of reaction can we get from there? Because now we have equal highs, so I'm seeing that as kind of right equal highs here. Turtle soup into an inefficiency. Boom, run lower. So if we did something like that, stop above daily volume imbalance. Because for me, I wouldn't actually want to see this fair value gap, as we said. Would want this to be a breakaway. So we want this one to hold us. But the 15-minute consequent encroachment is right here. This is where it gets a little tricky, right? Because I'm relying really on the 15-minute inversion as the play. So if we want to be truly safe, stop goes above the 15-minute. It's only 3.5 handles, but I guess I'm a little greedy. I like to have them 2-handle stops. So we'll try something like this. Because we're going to go higher up, we'll try to use the consequent encroachment for the entry into our sell side objective here. Actually, we'll go into the 4-hour partial to sell side. Yeah, like that. 15-second though, we may not get it. Careful here. Watch this high, low, higher, high, broken breaker on a 15-second chart. I prefer we go higher, right, to get the entry, but if we hold these equal highs, we'll understand why. So just kind of want to label that. Yeah, I'm stepping into about 1.5 years. Starting to really become clear to me. People just don't give themselves enough time. Oh, 100%, brother. You couldn't be more right. I've constantly said the only thing that separates me, right, from most everybody else is time. I've spent the time day in, day out with these concepts. Easily put in my 10,000 hours of study, right? Back test, forward test, journal. I've seen really everything I can see in the market, which is why we're never really surprised anymore. I may be wrong, right? That's not to say that I'm 100%. No one is, because human error, right? We're still going to read it wrong. We're still going to see something that, right, isn't there. But even when I am wrong, it's never a surprise, which is a nice feeling. And most of the time, if you guys have been around me, I'll know that I'm wrong before our stop actually gets hit. So then, right, I'm cutting risk even before our stop gets hit. So I very rarely take like a full stop out. Okay. So I like how we're kind of engineering some liquidity here. I like that. I like that. What the? How is your psychology? How is my I mean, I would say it's locked in. Has to be, right, to be profitable. That's for sure. But yeah, I was kind of the same way as you. Or I guess no, to be honest. I think I have good psychology because I played sports for a long time. I'm a college athlete, so I'm kind of used to that mentality of not necessarily failure, but pushing through struggle. Aside from that, I've spent so many hours listening to ICT that I almost think like he does in a way. And I've also spent the time to read books like Trading in the Zone, right? Big Mark Douglas guy. So I've put in the work the same way that I put in the work to get my analysis sharpened. I've put in the work to make sure my psychology is also sharpened. Because analysis without psychology is nothing, right? You can be the best analyst. If you can't execute, it's all worthless. Yeah, so many spaces. Jeez. Yeah, if I lose 2% in a day, I'll quit. That's my max stop right there. Hard stop. Because usually I'm at 0.5% per trade. So that would mean I have to lose 4 trades in a day, which I probably wouldn't even get to that, to be honest. Usually if I lose 2 trades, I'll try to cut risk slightly, enter one more. If we lose 3 straight, I'll kind of call it for that session and move on. And how do I manage yourself to respect that? So that for me, right, that really just comes down to discipline. I can try to give you these nice shiny, right, tools and reminders that I use, but I have found personally that the only way that I've been able to respect that is building my discipline, right? Because for so long in my development, I would say that, okay, if I lose 2%, I'm going to stop. I would lose 2%, and did I stop? No. Right? I'd say, okay, well, this trade looks good here, so I'll try to make that back. And then I'd take another trade, and then I'd be down 2.5%. And now I'm like, oh, okay, well, let me just try to get back to minus 2%. Right? So you see where we're going, where we're just digging that hole, revenge trading, full tilt. So eventually, I kind of got tired of it. I got tired of not following my rules. So I just started following them. Right? Nothing really too fancy or special. I just give it enough time. You start to see that I made the same mistakes over and over and over and over and over. So eventually, you have to stop making that mistake. No, I wouldn't take it. Right, Nolan? Because that's really what I just kind of explained. Where early on, right, say I lost 3 trades and I was down 2%. And I saw one trade that was like, okay, this trade right here, this is it. This is the trade. Even if I entered that trade and it won, I still wouldn't feel good because I went against, right, what I was supposed to be doing. Physically walking out the room, oh, for sure. Actually, right, physically removing yourself from the opportunity to enter, that's the easiest way I would say to do it. Because if you're not in front of the chart, right, you won't even be able to execute. So like what I would do early on is if I felt myself starting to get those emotions full tilt, I'll just start playing my PlayStation. Right, turn off the chart, load up the game, and just start gaming for a bit. Do you have a pre-market warm-up? At this point, not really, to be honest. Right, and I might be a little different than those in that case, but early on I did. Right, so I'd get up half an hour before, and I would do some stretches. And I would look at the market, and I would plan out my pre-market routine, which is good, right? I'm not dissing anybody that does that, but nowadays, I'm just really kind of so familiar with what I'm expecting. And most of the time, I'm doing nightly kind of recaps, so I know what I'm expecting in the morning. But I can get on maybe, right, 15, 20 minutes before I actually go live and just see what's taken place so far. So at this point, not too much of a actual, right, warm-up, we'd say. Am I using macros and silver bullet times? I would say yeah. Primarily, I try to. Right, it's not like I'm looking to enter only at those times, but if we get some type of setup and it's within a macro time, right? Primarily for me, I use the 9:50 to 10:10, and then the 10:50 to 11:10. Those are the macros I like to use. Of course, right, the silver bullet window, 10 to 11, you can find a trade at any time within that. But if I'm really utilizing the macro times, I'll try to look for an entry within that time window. Do you consider the 15-minute fair value gap from Thursday as rebalanced? All right, we'll peep. 15-minute from Thursday. If you're referencing this one here, let me hide this. This one, 4 p.m. from Thursday, February 1st. Cool. Yes, if you're referencing this one, I would say that it's balanced, right? Because we reprice into the low. Here, it becomes rebalanced when we leave it again. So if I was to drag that out, reprice into it here with this candle, even closing below that into the daily volume imbalance. But once we close above it with this candle, it becomes balanced. And that's why you notice, right? What's the very next candle do? It dips into it barely, takes off. So yes, this 15-minute is balanced, which is what we've hit here perfectly, okay? So this is that original 15-minute. Bounce off of it. I still would actually favor that, though. I'd like to see us get into it again. Even though it is a balanced price range, I'd like to see us revisit that area. But we'll go ahead and move it for now. Really just kind of stuck here waiting. No way we don't get our entry, though. Sometimes the market is against you. We had our limit set right at that volume or that fair value gap. So I'll leave it, but as you saw, entry here would have already been out. That 15-second. All right, I think we miss it. That's all right. Removing the limit. The limit has been removed. Oh well. Let's see if we get a return to this volume imbalance quickly. Maybe we can do something with that. Or actually, someone told me I could use the... What tool was it to make volume imbalances? Parallel channel. We didn't even get back into that. So I actually had a limit set there as well. I was just gonna go in with one, see if I can't quickly go from here into that sell side, but market didn't want us to participate on this move. That's fine. Not gonna catch every move, right? And I'm fine not chasing. We had our original entry point here on this 1 minute. Unfortunately, we just don't get entered there, and I'm fine with that. Right, as long as we continue to deliver as expected, that's all that matters. Instead, we hold the 15. So yeah, that's clean. Right, as we mentioned, if you wanted the actual safe entry, you use the 15 with the stop above it to target that sell side. But for me, I like being a little more precise, so no luck. You guys out. My bad, everybody. Had to step away for a sec. We'll call it a day here. Yeah, honestly, I think we'll call it a day too as well. Oh wait, make sure there's no more questions. Revisit without closing candles in it. Oh, sorry, Slay Queen. Revisit without... What do you mean by that? Sorry. Revisit without closing candles in it. C-Mob. Appreciate you stopping by, brother. Maybe we'll see you again. Ain't that a son of a gun? Hey, no problem, Sharky. I appreciate that, dog. Ain't the best, right? No such thing as the best or worst. The way I see it, I simply have years of understanding that I can pass down. So I figure I might as well at this point. I've kept it to myself long enough. But no, I appreciate that, homie. And yeah, I'll acknowledge that I do believe I have a deeper understanding than most people. I'd say 95%, honestly, as far as it goes, ICT understanding and concepts. Look at that delivery right into the 4-hour consequent encroachment. That's so pretty. Do I not trade? I do sometimes. If I do trade the PM session, it's usually power hour, but I tend to keep that more private. That's just kind of for myself. Sometimes though, we'll have like an afternoon stream, so watch out for that if interested. But yeah, I'm a big power hour person. Like if you go through my Twitter, you'll see a lot of my executions come during power hour. Enjoy your day as well, Norland. Eric, appreciate you. What are the limitations for applying ICT concepts to visual stocks? So I actually use ICT, right? I'm an options trader as well. Never really forecast that, but I use options with stocks. So if I show you like my watch list, okay? These are just stocks that I've actually currently been playing. What I do with stock trading, if I'm using options, is I use them like ICT concepts, but really on the daily chart or like a higher time frame objective chart. So like Apple's a good one to talk about, right? Last week or last Friday, Apple had cleared these lows and I bought calls. Because, right, what is that? Well, that's turtle souping short-term lows, equal lows into an inefficiency as well as a breaker, right? Notice that. So on a daily chart, low, high, whoa, restart, low to a high to a lower low, all the way up here, okay? So I'm really saying this consecutive up close candles, bullish breaker, boom, drag that out. We'll just leave it, whatever. Within that, guess what? Daily fair value gap. Hey, and equal lows. Right, so this is still the same concepts, but I don't use them on the 1 minute because if we're playing stocks, right, they're just going to move uglier. How do options work? Oh my goodness, brother. That might be another stream because we can go into, that could be a 5-hour video. Basically, options are, okay, instead of buying one stock, if you buy one option, you're buying 100 shares of that stock in a way. And you're playing off of the fluctuation of movement high or low, right? And that gets into dealing with the Greeks, theta, data, all that nonsense. But in short terms, it's a way to leverage your money, right? If you have less money and want higher gains. It allows you to own 100 shares of a stock rather than just one without needing to put up the full money up front. Let's go back to the questions. So you are not expecting a small reaction reversal here after such a... Oh, okay, so you're saying I would not... Let's go back to ES, sorry. So would I not expect a reaction here? I mean, to be fair, I would like to see one, but I need to see one first, okay? So I'm not trying to figure out how I want to put this exactly. We can anticipate a reversal, but I'm not going to force that idea, if that makes sense. So enable for me to start looking for reversal, I need to see bullish structure being put into place. And the way that could look, right? So let's say that we are to run this low. Boom. We run this low, create some type of fair value gap, invert that fair value gap, and then break structure or whatever high was here, leaving the 4-hour. At that point, right? If I see something like that, then I expect the 4-hour to find support to return into new day opening gap. But if we just deliver how we are now, right? Kind of slowly moving up, we're just leaving more liquidity behind. So this to me is more of like an OTE entry, okay? To where we would look for price to return into that OTE, pair that with the fair value gap, and then more than likely it would probably break from there. In order for me to remain bullish with this type of delivery, we need to clear this. So if we can actually clear this 1 minute fair value gap, at that point, I'd be okay looking for longs, right? If we haven't ran this low. If we run this low first, break structure, I'd be fine longing before we even clear this. But it looks like we're not going to get there, so I would need to see this be broken first before trusting any kind of run back into this range here. All right. Where are we at? What do you like about power hour, which is repeatable? What I like is that you get the entire day's price action played out, okay? So you're going to have the whole day already established. You see what price is done, where price is gone, where price is coming from, and where price wants to go. Aside from that, now you're also going to have a macro during power hour, right? The market on close orders, to where if you're on side and there's an obvious liquidity pull, price will rip into that. And that's very repeatable. And it's something that you'll notice quite often. Aside from that, Power hour also, right? If it's not going to be ripping, it's going to move methodically, which is something that I also like, right? What I mean by that is it'll create discounts, revisit that discount more than once, maybe leave, create a new discount, right? Revisit the most recent discount. So it will tend to create kind of stair-stepper delivery to where it's returning into discounts quite often, which allows, right, stacking opportunities. And that's what I like about it. Thanks, bro. My name is Lincoln. Yeah. That is my name. Like risk management, how to buy and sell, put stop loss. Oh, okay, my bad. Wajit. So stocks are different, okay? Because you're not necessarily using stop losses in a way. Like when you're doing options, like for me, right? We'll go back. So the app will play them in. I'm not using a stop loss per se, because when you buy calls, there's no such thing as like, right, the stop loss. You either have to sell the call or just hold it till expiration. But what I'm doing is I'm saying, okay, I'm going to buy the call here at these lows. And I still want to see normal structure. So for me, right, this breaker should hold us, which means if we get price, so if Apple was to close underneath the breaker, I would cut that call right there. So more of a manual stop loss. Right, and for me, I want to see these highs up here. So I'm holding this until, right, we start gravitating. If we start like overtaking this volume imbalance, I'll close some of the options just so I can lock in profit. How do you manage? Oh, yep, Nolan just answered that. So yeah, I don't use one, right? Because it's usually on a daily chart. So it's not going to be moving so quickly like on a 1 minute. And you don't really have to worry about like when you buy the options, if it starts moving against you, you can only lose what you paid, right? Which of course is kind of what we're used to. But if I go in with a certain amount, let's say, right, if I'm going in with 5K that I'm willing to lose, then I'm fine just letting it run against me until we get there. Surfskate. No, I don't have any PDFs or anything like that. To be honest, I don't really have much educational material. Like I have, I guess, in my Discord. So I guess that, not to like plug that or anything, but in the Discord, I do have breakdowns of all the concepts I use and how I use them. So if that's something that you are interested in. But as far as like a PDF paper, nah, not really too much anything like that. Equal highs on the 1 minute. Let's go back to ES real quick before we wrap it up for the day. Equal highs on the 1 minute, not catching your eye. No, they are. Right, these equal highs here. But you don't want to get caught in that situation where, right, just because there's equal highs here and we say those equal highs have to get taken, that's retail thinking. And we don't want to get caught in that trap. Narrative outpaces that. And to me, even though these are equal highs, right, go to a 15 chart, that's simply using the 15-minute inversion to now continue to deliver lower. Right, that's all that is. Like even on a 5, we have equal highs here, but we're returning into the 15-minute inversion and holding that. So if we want to remain bearish, we don't have to get back up there because we've already done the work we need to. We can hold this fair value gap here and once again attack this low. Right, if I show you on a 15, usually, so this will be a good study session here. If we create a wick like this, reverse, and then overtake that wick, more often than not, that would become an area that we would not expect to see broken, right? Wicks are gaps. So we can see that as almost a fair value gap in a way. Right, which is why, for me, I wouldn't trust going long until we clear this. That's my trigger point. Unless, right, we were to clear sell side first, then break structure. But if we just keep pushing higher and higher, I wouldn't feel comfortable looking to long until we clear that 1 minute, which at that point, we're already so close to these highs. You feel me? Yeah, that's what I do. 2 options are frustrating from time to time. You should make a video about options. Maybe, honestly. There's not much out there on options. Like how to use ICT concepts in conjunction with options trading. I can see that. I'll add you in Discord. It's a private Discord, Surfskate. Sorry, I should have mentioned that. You could add me, but if you actually want like access to it, yeah, it's private. Privatized. What are you expecting for DXY? Good question. I'm not, like I said, I'm not someone that really uses the dollar too much. We could look though. Oh my goodness. I mean, look at this, right? So if we're going to look at this, we've finally broken out of that range. Dollar obviously bullish. I want to see this fair value gap here in dollar. So we have a daily fair value gap right here. I'd want to see if this is a fake move up to clear out buy side liquidity here, and then these equal highs to now hold at this premium, right, to revisit lows. If we push up and through, let's say even consequent encroachment, if we get a candle to close above consequent encroachment, I think we actually revisit the high of that fair value gap, which would mean, right, indices here. We'll pull up indices. Oh my goodness, why is that? Right, this is what I mean by the dollar. I haven't paid much attention to the dollar because notice as we're moving up here in the dollar, what is ES also doing? Moving higher, right? That's not what we would normally see in correlated markets. Same with NQ. NQ's been moving up as the dollar's been moving up, even though we created this low. But at the same time, right, that's kind of why I'm not putting too much emphasis into this. In my opinion, if we did get kind of that delivery we're expecting where that fair value gap holds, right? We hold this bearish fair value gap actually, sending dollar lower. We should go, I mean, we should absolutely rock it here. ES should, right, run straight into all-time highs here. Because we see as dollar is moving up, ES still kind of moving up. So it's showing strength as well. Which in my opinion, if dollar starts failing and showing weakness, ES, the indices are going to show even more strength and they should catapult, which is why I still want to see, right, buy side. To me, my objective is this high. I will not budge from that regardless, right? Dollar could be breaking all-time highs. If we're near that high, I want to see it in ES. In order for me to really flip my macro, we'll say perspective, we need to get underneath this daily fair value gap here. Whoa, a lot going on up there. But basically, right, this, I'm just going to hide it, fuck it. This daily fair value gap here, price would need to trade through that, close underneath it for me to start looking for lows again. Until that point, right, we can run this low, still hold this, and I would still want to see higher prices. Yeah, that's our outlook. That is the outlook. So far, just kind of playing around here, so, okay. Yeah, we're content with what we had. We'll show quickly the, oh wait, what the? Oh, okay. I was like, what the heck? We'll quickly share the, right, once again, the entries this morning. First entry here, clear cut, fair value gap. YouTube model was formed at 9:30. Bearish fair value gap put into place. As I had mentioned, don't want to blindly go in here, especially with the news. So we're waiting to see what happens. Price shows it's unwilling to break above that fair value gap. Displaces underneath a swing low, as well as the midnight and 8:30 level, right? Power of 3 to the downside initiated there. Bearish fair value gap left behind. Shorting as we tap into that, stop above consequent encroachment. First exit, new day opening gap. New fair value gap gets put into place. So once again, we go back to monitoring order flow. We reprice into the high, we leave it becoming balanced. We go short on the volume imbalance entry here. Stop above the candle that creates it to get out at the low of this fair value gap as well. So another 5 handles, right? Exiting at the low of the new day opening gap. Once we hit the low, we create equal lows. Same thing here. We now create another bearish fair value gap. And just like here, right? Same exact thing. We've already confirmed we're going to be bearish. So I don't need to wait for a confirmation like I did here. Instead, going short right on that fair value gap. And I wanted to hold for, right, the 4-hour fair value gap that we had here. And these lows. So you can kind of see I exited a lot earlier than I would like to. I was going to partial out here, let some kind of run, but instead I closed the full position. So use the error. Can't complain though, right? Money's made. We're content. Profitable day. Objectives are met. Price moves as we expect. Overall, absolute beautiful of a day. Bostic Fed member voter will speak at 2 p.m. Okay. Yeah. I don't really care about the Fed chairs PAL. PAL's the only one that I'll kind of pay attention to. I don't have any PDF, unfortunately, Mohammed. No PDFs for me. Yeah, 11 o'clock. So at this point, right, 11 o'clock is kind of my time window. I trade from 9:30 to 11, hour and a half in the mornings. Right? Keep it simple, keep it easy. As you could see, if the move is present, we'll catch the move. But now we're content with where we are. We've hit a higher time frame discount. As we said, we're playing inside of now, right? A premium extended rally or extended sell-off will lead to consolidation. And you guys kind of have my right understanding. As long as we hold this, I still look for lower prices. If we can clear the 1 minute fair value gap, that would be my flip point. At that point, I would start looking for basically a return into this range here. So maybe the new day opening gap or the daily volume imbalance. But yeah, if that's how often do I go live? I go live every day. So I have a Discord. This is kind of recent what I've started doing on YouTube. I have a private Discord where I live stream every day. YouTube, maybe once, twice a week. So we'll do this one today, and then more than likely we'll have one Friday like we did last week to kind of close out the week. Really depending on, let me see what the... Yeah, okay. So yeah, for YouTube, we'll be live Monday, Friday. Monday and Friday. Yeah, it's possible. You can join it. I think it's... The link is in my... So if you follow me on Twitter or YouTube here, the link will be in the description. And it is 40 a month. 45. What is it? All right, actually, hold up. Yep, 45, I lied. 45 a month. Let's keep an eye out, because I have been talking with the actual private Discord members, and we may start we'll say reshaping, restructuring that whole thing, but either way, a lot of value in there. And rather cheap in my opinion, but I have blown my 4 funded account last month. I would say unstable personal problems, only demo trade this month. Any advice to reflect on? That's tough, Muhammad, because I'm not sure what it is that, right, made you blow the accounts. If it was something to where you simply were just offsides, right, poor analysis, then it may be something to where you just need to spend more time refining your strategy, right, back testing, forward testing, learning how price moves. If it's something to where your analysis is pretty good, but you're finding, right, the executions are sloppy, or you're finding that the emotions are causing the troubles, then I think you need to journal more. Get comfortable and confident with seeing price, right, deliver as you would expect, which will take a lot of those emotions away. More psychological. Yeah, more often than not, right, it's more psychological. And if it is something where it's the psychology that's affecting you, like you said, demo account, perfect. Or honestly, another thing that would help is using an evaluation account, but right, very small risk. Could you please set? Oh yeah, so the settlement function is just, what is that on the higher time? It's usually for the daily. It's the daily settlement price. Right, so when price settles at the end of the day, it accounts for basically that. Right, so the settling price is the closing price rather than kind of letting it roam after hours. Like if I was to take it off, you see how it looks different there, right? Less volume imbalances because it's not adjusting for the actual close, which is why I leave it on, because I want to see those volume imbalances personally. Overtrade and revenge. Yeah, if you're overtrading and revenge trading, Muhammad, then I think it's an issue where, right, lower your risk, play in that demo account, and only look for the high probability entries. Also, right, take the idea of making money out of the equation. I know, at least for me, so it may not be for you, but for me anyways, I struggled so much because Right? I had this expectation that I had to make money trading. And that's just kind of an unhealthy, I guess, obsession. Eventually we all want to get there, but right, if that's the sole goal, you're going to go into trading with that mindset and you're going to force your expectations rather than just seeing what price is doing and hopping on board. So I wanted to leave, but I really want to see what we get here. Because right, notice we're doing that stair-stepper delivery right into that fair value gap. Look at all this sell side right here, right? Starting from this low, equal lows, short-term low, short-term low, short-term low. We're hitting the OTE. We're hitting mean threshold of that wick. Yeah, okay. We'll see what we get there. Just want to see a quick reaction. One day you have to understand that almost never ever going to succeed in the long term if you stop doing that. Wait. Oh, okay. Yeah, I see what you mean. Yeah, to stay long-term consistent in this, right? Your discipline and your we'll say self-mastery is really all it comes down to. You have to be able to master yourself before you become a market wizard, one will say, right? Before you can truly take advantage of your skill set and analysis, you have to be able to actually fully control yourself. Watch something like this. My pyramid was pyramiding into the losing positions to get out quickly. I see. Yeah, that is crazy, Francis. I don't mean to laugh, but I feel you. I've been there. Add to the losing trades and hope that once it goes back, you can close it. I laugh because I've been there, brother. The pain. All too real. Trading sucks, fellas. Trading is hard. I'll tell you this. Trading is one of the hardest things I ever had to do. Right, and I got 2 degrees in college, and I was a full-time college athlete. And still, this is the hardest thing I've ever had to do. And it's not necessarily the price movement, right? It's just the fact that you're wrestling with yourself so much. And that's why it's so important to where if you're not disciplined, you're going to implode over and over again. So as we said, right, closing above this, consequent encroachment, early indication, we run into highs. We do that. And I'm fine missing this move, right? The one move you could have used is the inversion. I'll give you that. So what we often look for, if we're bullish, this would be, if I already had a bullish bias, if I was fully bullish, right? This is kind of different because I wasn't. But if I had a fully bullish bias and we had hit that 4-hour fair value gap, you look for the last premium prior to delivering into your POI. Okay, so this bearish fair value gap is created as we trade into the 4-hour. If we are going to trade above that, we use that as an inversion, just as we would here. Right, and notice what we got. We traded above it. No candles get near it. Blast off. Same exact way, right? We have equal lows here. And those are there because we're hitting the 4-hour fair value gap. So we don't need to run that low. Same way here, right? We had equal highs. We didn't need to run the highs because the 15-minute fair value gap itself was the premium that we were using, and the bodies never got near that. But yeah, at this point, I would look for a reversal or retrace back into this inversion, into this 1-minute fair value gap, followed by an expansion move again, back up into the range. Whoa, jeez, bruh. Pharmacy work is easier. I'm sure it is, jeez. As much as I love this, what I do, freedom and all that, it was a grind, no doubt. At times, I definitely questioned if it was going to be possible, if it was worth it. $11.10, okay. So $11.10, we kind of ended that macro hour. One thing I do want to point out, right? 10:50 to 11:10 is the macro. Well, let's take place of what happened here. At 10:50, right, we had inverted this inversion at what time? 10:49. So at 10:50, first tap into the inversion, right? Not random. Returning that discount. Consolidate. And then right at, I guess 1 minute early, but 11:09, right, we return into that 15. So from a discount up into a premium during the macro time frame, it's pretty clean. Yeah, we'll leave you guys with that today. Appreciate y'all hanging out this morning, YouTube gang. As we mentioned, we'll be back on YouTube. Clear all this nonsense. We'll have our next stream on Friday, maybe Thursday. We'll see. Got any journaling techniques or advice? Yeah, before I leave. So what I did, Slay, right, is I would, at the end of the day, my journaling was, I would go in and I would mark up exactly what took place and how I could have been involved, even if I wasn't, okay? So like, let's say that maybe you were trying to go long here or something. Or let's say at the end of the day, right, you didn't see any of this and you weren't able to capitalize on the short. What I would do, and I'll just kind of go here and show you. I'd go, okay, oops, let's clear all this first, actually. I would mark up the trade as if I actually took it. Right? So I'd mark up, okay, well, we had this short-term high cleared, followed by the break in structure here, leaving behind the YouTube model. Boom. Right, and then I would label this fair value gap. So I would first just kind of label the PD arrays that were used. And then I would put in right where I would have entered with my stop loss and my TP. So like say you didn't take that for real, right? I would go in and I would mark something like this up. I would take a screenshot of this and then I would put it in a journal, right? And I would also type. That's another thing I type. We'll just go quick. Like, price showed an unwillingness. Whoa, if I could type to break through the premium, signaling bearish order flow. Okay, so now I'm putting all this, I'm writing everything that I can to kind of burn this into my mind, why this was a good short to take and the reason I would have taken it. Right, even here I would put displacement through midnight and 8:30, as well as bearish market structure shift. All right, so we're labeling all the confluences that we had to take this trade. Right, same reason here. Obvious draw into new day opening gap. All right, so once I do this over and over, day in and day out, right, day in and day out, eventually you start to see these moves beforehand. And I actually want to show you, I haven't done it in a while, but I think I still have my Notion from when I kind of was doing this. Just so I can show you actually a legitimate one that I had used. Maybe not. Can't find it. Okay, here we go. All right, so look at this. So this is an actual screenshot from one of my old Notions. And this is how I would journal. So like on this day, I didn't catch any of this, of course. But I would go in at the end of the day and mark it up as if I actually did, with the reasons why. Right, well, we ran a short-term low prior to 8:30, nice. We returned below the 8:30 opening while we balancing a previous imbalance and creating a YouTube model. Right? So there's a high probability setup. And you just see, right, I'm adding all the confluence I need. Your streams of fire. Hey, thanks, Francis. Hyping me up, dog. Hey, I appreciate that, homie. Thank you. On those days when you doubted yourself, what did you do that helped you get out of that state of mind? Ooh, I like that question. Okay. So what I would do is, first of all, I would remember the why, right? That was probably the biggest thing. And that was something I learned from sports, actually. Is having a why. Like, why am I doing this in the first place? And for me, right, that was family. Mom. So I was raised by a single mom. We'll get a little personal. Won't tell you everything. But for me, never met my dad, right? Single mother, struggled all my life. So for me, escaping that, being able to provide for her was the number one reason why I even got into trading. Right? To basically be able to be free, right? Be successful. So at times when I felt like, I don't know if I should do this, I don't think I'll ever be able to figure it out. I would sit there and I'm like, well, why did I even get into this? Like, why did I start doing this in the first place? And I would remember that, right? Oh, I'm doing this for her. I'm doing this for something bigger than myself. And that gives you that motivation to keep pushing. Right, and aside from that, right, aside from having that kind of unshakable spirit, that why, what I would also do is I'd be like, okay, I would go into my journal, and this is why journals are so important. I'd go into my journal, and I would read entries from like the very beginning of when I started trading to versus kind of like where I was at that point in time. And even though I felt like I had improved, it allowed me to see, right, this progress and steps I had taken since the very beginning of my journey. So when I felt like I was stuck or felt like I wasn't really doing what I wanted to do, I was able to look at that and understand, oh, I've already come so far, right? I've already progressed in this type of way. It's only a matter of time, as long as I stick to it, that I reach the goals that I want to reach eventually. Right? It's that waiting game, that discipline. I did cheat on NQ. Yep. NQ was my baby, to be honest. I mean, honestly, I'll just show you this here quick. And when I first started all this, look at this. All NOS. Some S&P, but primarily straight NQ. But this is what I mean, right? I have hundreds and hundreds and hundreds of these. Hundreds and hundreds and hundreds of trades executions. Right? Old trade journals. So I can go back into this at any time that I'm feeling, right, we'll say bad, and realize, oh, I know what I'm doing, right? I know how to do this. Oh, I'm weak, look at this. So this was the first time I passed a challenge. I opened right to it. Or was it the second time? Either way, right? Huge trade for me. So this is the trade that passed my challenge. That's just funny to see now. And this is what I mean, right? Being able to kind of look back and see how far I've came, the progress I've made. It's cool. What happened? For me, I got more consistent. So I've kind of spoken about this before, but early on, I was a big NQ person because NQ moves more aggressively, right? Larger ranges. So I felt like for me to be profitable, I had to capture more handles to make more money. Just neophyte thinking. All right, I wasn't confident in my actual analysis and executing ability. So I felt like I had to catch larger moves. Whereas now, I'm fully confident in my executions and my analysis and my understanding. NQ moves a lot more cleaner. Right, so I'm fine catching smaller ranges over and over than trying to catch, right, one large range. And that's why I'm fine doing like 5-6 handles at a time, back to back to back. Of course, if something calls out for like an obvious draw on liquidity where we can hold for longer, I'll do that. But more often than not, ES is just a little bit cleaner, a little more precise. It allows me to have tighter stop losses. And that's why I prefer that. So just personal preference. Right, I know people that absolutely shred NQ day in and day out. Tear it up. So it's really up to what you like best. Aquaman chart colors. Yeah, I had crazy chart colors. I still have it. Look, here's my color theme. It was Glacier Freeze, the Gatorade. Hideous. Or when I try to be a gold trader, I had the gold outlook as well. Hey, pretty clean. What other ones do I have in here? Ooh, the sunset. What you know about that? That's the RIP Kobe. This was after Kobe died. Had to give a little Lakers reminiscent. But all right, everybody. I think now we're good. Got some chatting out of the way. At this point, price is kind of playing back inside that new day opening gap as we expected. Boom. Nope, that's not it. What the heck? Oh my God. Cool. All right. But yeah, back inside that new day opening gap. At this point, no real bias for me. All right, it's only Monday. So just starting out the week. I'll let the rest of today play out. And then, yeah, we'll see what we can get tomorrow as well. So my first low so far till I come back. Might be I step in your mentorship soon. Hey, no problem, Mohammed. And yeah, if you guys are ever interested, right, the link in the stream should take you to the WAP and whatnot for the Discord. Not a must. Like, no one really needs to join that, but if you want to be there every day and kind of sit on as we do this every day, right, that's there for you, as well as get the market recaps and just kind of more advanced concept breakdowns. Feel free, but if not, just come hang out in the YouTube streams whenever you can. Yeah, until next time, we will go ahead and end this one for today. As always, thank you guys for hanging out. And see you guys, or I guess if you're in the Discord, see you guys tomorrow. If you guys are free, we'll see you on Friday. Take care, everybody.